Hi, I'm Dave,
And I'm Paul.
and we're going to challenge you to transform your financial future through the principles of the most profitable business in the world, banking.
We believe everyone should be involved in two businesses, the business that you're in and the banking business. Everyday people can replicate what bankers have been doing for centuries to leverage capital and build wealth through private lending.
Join us as we uncover the truths about money, expose lies and myths, and flip conventional financial advice on its head. Here we go. And we're back. What's going on, Paul?
How are you?
I'm good, man. I'm good. I had a locked down an office for the summer. So I got
so after all this money he spends on this, what you see in the background, if you're watching on YouTube, now he's going to go somewhere else.
Well, if you had 7 kids at home for the summer, you would too. So
Yeah, no doubt. No,
Yeah.
good move. Good move. It's
yeah,
good.
So that'll be good. There'll be a different background probably for a lot of the recordings come summertime because I'll be doing it there where it's nice and quiet, no interruptions. I've got a whole building.
You can take a
myself, actually.
picture. That's going to be cool. You can
Yeah.
take a picture of your background now and make that your Zoom background.
Oh, that's a great idea. Okay.
Mm-hmm.
Yeah, man, you're full of great ideas. All right.
You might need a green screen or whatever, but
Yeah, I don't know.
Maybe.
As long as my software is up to date, I don't think I will. So
or just have like in the background like some dental thing.
yeah, maybe I'll do it from a dental chair. So it's an actual dental office that hasn't reopened since COVID. And it's a buddy of mine who owns it. And I walked in there, it's like full up dental office, the chairs, everything, the reception area. So maybe, find somebody who wants to sit there and act like a receptionist. Got the whole place to myself. Nobody's using it. Got the key, got a parking spot. It's great.
Nice.
I might, it is Minnesota, so I could probably squat there and he'd have to try to evict me through some legal process. I won't be able to, so I'll just keep it.
That came up in our office the other day, and I sit around a lot of like infantry types,
Yeah.
meat eaters. They had a lot to say about squatters.
Yeah.
Some good stuff.
Your country's in bad shape when they have to pass a law to help you remove squatters from your own residence.
Right.
Pretty sure that's the purpose of government, is to protect my property.
Yeah, that's right.
Like-
yeah, we've lost our way. Let's face it.
Terrible.
Well, half of
Terrible.
the country has, I suppose.
Yeah, right.
The dumb half.
The dumb half. Hopefully it's less than half by now after the last few years.
Yeah. I don't know. Anyway, so you have a good, pretty funny client story, which just falls right into our laps for what we
Right.
do here with the infinite banking concept. So
Yeah, so I was talking to him this week and he was mentioned, he listened to one of our episodes. We talked about HELOCs and he's like, that reminded me. He's like, recently, my bank who's holding my mortgage told me I should apply for a HELOC. And then I went through the application process all the way through it. And then they denied me.
imagine that.
Imagine that. This is a guy who's got a great income, no debt, and got denied the equity in his own home, even after the bank said you should do it, which of course they want you to go through the application process and they want all of your information because they do stuff with that data.
Yeah.
And then at the end they say, yeah,
And they tell you
give
that
it
they
to you.
do too.
Yeah.
Yep.
So ridiculous, right? So just another, this was another point to him on why he's doing this, why he's doing infinite banking and building up equity in his life insurance policy that he'll have contractual access to whenever he wants it for anything. No questions asked.
Yep. And we've said it a bunch of times, and I'm pretty passionate about this, is that, home equity, you can talk about it with real estate investors and like, yeah, just go get a HELOC and we've talked about it before is how, well, maybe you can,
Yeah, maybe.
right?
Yeah.
Maybe. But again, home equity, folks, it's dead money, which means it has no value, right? What's the value of a dollar you can't get at? So it's no different than, if you had that money locked, if that home equity is locked up in a 401k somehow, right? It's the same.
Or buried in your
same
backyard.
effect.
Somebody
Or
buried,
buried
it
in your backyard, or
it's there. You can't access it. You can't use it.
Yeah,
Yeah,
it's
does
dead. It's
nothing
dead
for you.
money. That's why, and that's why I've been advocating kind of my plan. My personal plan is to never pay off my house. I'm just
All
going to
right.
keep pulling the equity out of it, using the bank as much as possible, and putting that equity into whole life insurance policies.
Yeah. You use the bank as a tool instead of being
Yep.
a tool of the bank. Make the bank your tool, and there's some great ways to do that, and that could be an entire other conversation or episode. Um,
Mm-hmm.
but yeah, thought that was a telling story and just reinforcement to somebody on why he's doing what he's doing now with IBC.
Well, tell him I said he needs to pay more premium then.
He's paying a good amount. He is.
Okay.
So
Time to pay more.
pay more. Yeah, we're
Time
at
to pay
well.
more premium.
He's setting his family up for success because his wife's going to be getting a convertible term policy, and that's the next one.
Excellent.
That's the
Excellent.
next branch of the bank is when they're ready for a second policy. Then they just reach in there and convert that term, put it in play. So
Awesome.
a lot of people are doing that lately. I think that's becoming, maybe it's through the podcast or just it's a lot more of my conversation with people that let's add some convertible term on somebody so you're set up ready to go for the next one.
Yeah, right. It gives us time. Right. There's no reason. It's so cheap. There's no reason not to have it.
Right. It is. I mean,
There's
it's
no reason not to have it.
It's like it's term insurance. It's inexpensive.
Right. And all the propaganda you've been told your whole adult life anyway is buy term and invest the difference. This is just better term.
It is better term that,
Mm-hmm.
yeah. So there's a whole other episode on that that you could check out. I want to say episode 18. Could be wrong, but I think that's it.
Wow. Look at that recall. I have no idea.
Maybe I've said it so many times to people, hey, go listen to this episode. Because I could spend a half hour talking about it to you, or I could just direct you to an episode that you could listen on 1.5 speed, get the same information, even better because it's coming from you too, you as well. And, they'll be fully educated. But, speaking
But don't
of,
listen too fast.
Yeah, I have to
'Cause we
listen at
sound weird.
1.25. I can't listen to anything at 1.0.
That's okay.
I just can't. It's too slow.
Right.
Yeah. So, because we can comprehend a lot faster than we can talk. So,
Right. That's true.
Yeah, your brain's quicker than your mouth is. For most people, not everybody. But speaking of expenses, we said, hey, term insurance is really inexpensive insurance. When we think of insurance, I think this has come up lately where people who may show interest in infinite banking and then they get to the end of the process and they decide not to go through with it, right? There's always going to be those people who they get to that point and they still view it as an expense versus what it really is, which is what?
It's an asset.
It's an asset. Absolutely. So, but every other insurance in our lives is an expense, except for life insurance. Life insurance is the only insurance that I know of that is an asset. Right? Can you think of any other insurance?
Right. Well, no. I mean, it's, we've always looked at it as a necessary evil, whether it's automotive or home or maybe liability. We have to carry liability insurance, right, for our businesses and stuff and for our licenses. But yeah, there's not another one that makes me money, right? And then makes money for the entire family after I graduate. No, of course not. This is an asset. That's what really, again, the people that don't end up, either paying the appropriate premium, I would say, relative to their income, or even they finish the process and then have this, somehow they have this change of heart because their Uncle Bob talks them out of it, or, their spouse who knows nothing about anything talks them out of it or whatever. That happens sometimes too. And that's fine. But yeah, it's a lack of understanding. Why do some of us look forward to paying premium and others look at it as, oh, this is an expense. I really don't know if I should do this, right? It's a complete just lack of knowledge.
It's a mindset.
That's the difference.
Yeah, 100%. And we grow up until you discover infinite banking. Every kind of insurance really is an expense. Even life insurance, in my mind, it was an expense until I discovered infinite banking.
Right.
Hey, it's an expense. Most things. Let's compare all the other types of insurance that we're commonly used to, which are definitely expenses, with life insurance, which, if used appropriately, is anything but an expense. It's an asset. So when you think, here's one with most insurance. So let's just say in your mind, think auto or home insurance. Let's just do that. And then we'll compare that with life insurance. Well, that insurance, auto, home insurance, you may never need it. And you really hope that you don't. But versus life insurance, where there's a 100% chance you'll need it. 100% guarantee, not chance, 100% guarantee that you are going to need it. There's a big difference right there.
Right. And of course, we're talking about some people can go maybe their entire life without getting in a fender bender or having damage to their home via hurricane, hail, tornado, whatever.
Yeah.
That I'm sure that does happen in some cases, right? But there's a 100% chance that you're going to graduate someday, and
Guaranteed.
you have no idea when that event's going to occur.
Yeah, for the most
hurricane,
of
you, weeks out maybe.
Yeah, but for most of you, when you do graduate, it's going to be well after the age of 65, which means
yes,
you won't have any term insurance left. It will have expired by then, in most cases.
That's right. Term insurance will pay out if you die during the term, but whole life will pay out when you actually die.
Right.
Which is going to be outside of that term.
Yes.
Odds are.
So because you may never need that other type of insurance, but you still have to pay for it, it's still an expense in your life. It's really a sunk cost, right? There's no guarantee you're going to get that back. You're going to get, you never want a car accident, but when you do, you're like, well, hey, finally my insurance money was worth it because now I got reimbursed for more than I paid. Which over your lifetime is probably not going to be the case. You're probably going to pay more in insurance over your lifetime than you'll ever get reimbursed for cars or autos. Homes, anything like that, right? So that's a sunk cost for that insurance. Versus life insurance, you're going to get 100% of your money back. And likely during your lifetime, you're going to get 100% of your money back if it's designed properly for the purposes of infinite banking. So it's anything but a sunk cost because you're going to get it back.
And I know our listeners know what Dave's talking about. If you're new to this podcast, what Dave is talking about is taking perhaps tax-free passive income off the policy while you're alive, using that life insurance line of credit, or the policy loan as it's actually called, to take out of the policy via that line of credit more than you've paid into it, many times over, more than likely, depending on how old the policy is. Anyway, that's what he's talking about.
Yeah.
The living benefits.
Yeah. The living benefits, the cash value, which is the equity of the death benefit that you have access to contractually. Eventually, you're going to have access to 100% of what you've ever paid into it. Does your car insurance do that for you? Does your home insurance do that for you? Absolutely not. So they're two completely different. You can't put them in the same bucket.
That's right. And likely, again, you're going to have what Dave just said. You're going to have access to 100% of what you've paid into the policy as early as 8, 9, 10, 11 years into the policy. So it's not like what's his face says on his radio show, 28 years, you're still upside down.
Right.
Anyway, sorry.
Yep. So,
much earlier than that.
Maybe in some policies, I don't even think in, 100% all base.
And regular policy. Whole life is, I remember my original ones were probably 20 to 25 years, probably.
Yeah.
Non-participating. So it was pretty far into it before what you had in cash value was what you'd paid in premium. It was
Yeah.
very far out.
And the way we design this, you hit that point in a fraction of the time.
Yeah. Even if we design an all base premium policy for you with no PUA or no paid up additions rider, at year 13 or 14, every dollar you've paid in premium, you'd have this, that much in cash value to access. So
yeah,
still better than non-participating by a lot.
Right. So you're going to get 100% of your money back.
Yep.
Or, if you graduate the day after you put the policy in force, then
pretty good return.
That's a pretty darn good rate of return because of the death benefit your family's going to get tax-free.
Yep.
So, yeah. Another thing comparing the two different types of insurance is your home and auto insurance. That's required by law. You have to have that versus life insurance. That's 100% optional. So just that being somebody like myself who doesn't really trust what I'm being told by Uncle Sam, the majority of the time, that's a little telling that if something's optional, I might want to look into that because it's probably good for me if the government's telling me I don't have to have it.
Yeah. If the banks don't, if the banks aren't requiring, think about this. Here's how, this is a little off topic, but here's the connection between government, Wall Street, A.L. Williams back in the, buy term and invest the difference. And I think that's now Primerica or whatever. And, they want you to buy term and invest the difference, so buy term insurance, which will never pay out most likely. Yeah. Put your money in Wall Street, right? Oh, here's a qualified plan. This will give you, you can defer your taxes, whatever. None of them are saying, oh, you should, oh my gosh, you could create your own financing system through this great old asset, which has a perfect track record of dividend paying whole life insurance through a mutual life insurance company. So yeah, you bring up a great point, Dave. Whatever they're telling you, what they're telling you to do and the programs they're creating, and Nelson says this in Becoming Your Own Banker, right? You should be a little bit suspicious, problem, solution created by the same people that, oh my God, it's worth your exploration just based on that. If you have any, if you're a little suspect of what they're doing over there, a few miles down the road from where I'm sitting,
right?
Look into it.
Yep. It's all about the way you think, as Nelson says.
Because there's no money to be made by having an independently wealthy populace, right? If everyone's doing IBC, then someone's going to lose.
Well, nobody's dependent on the government, which means nobody's out there asking you to fix all their problems, thus giving up their freedoms and giving you authority to do things that are not in your constitutional authority to do. That's
right. And what we have, as we go further on our personal IBC journeys, you realize more and more how much this process and this concept, and we've said it before on the podcast, but it is the very definition of freedom. Because if I'm not tethered to the banks because I don't need them, that's real freedom. When we think of freedom, we think of private property and we think of, but when it comes down to it, if I'm not financially dependent on another entity, that's true freedom. That's
right.
Independence.
It really is, because everybody complains about, big corporations and government, rightly so, that it's the bottom line. That's the only thing that matters. Well, individually kind of is too, people need money. And the bottom line at the end of the day is if somebody's going to take away your livelihood, a lot of people are going to cave to it because you need money to survive. You just do.
That's right.
Yeah,
that's right.
So, all right. Well, here's one of my favorite, auto and home insurance. That replaces the present value of a loss. Life insurance replaces the future value of a loss. What other insurance does that? Does your home insurance, does your contract say, we will give you what we anticipate your home to be worth 30 years from now, even if it burns down tomorrow? So all that appreciation you would have had, you get to, no, of course not. But what does life insurance do? They say, hey, this is how much you were going to make for the rest of your life. We will replace all of it.
Yeah, and it's funny how, and again, it's a lack of understanding how people fully insure all their stuff because the bank tells them they have to, or the government tells them that they have to, right? If you have a note on a car, you have to have full collision, right? Liability, obviously, you want that anyway. But yeah, we don't teach anybody or explain to anybody, hey, you might want to insure this thing called your future income because your family might need that.
Yeah, your human life value.
Yeah,
as Solomon Huebner would say. Right. So that future loss, like it's not just today. You know, it's what does your family need tomorrow, next year, 10 years down the road? They're going to need a lot more than just what you're making today.
Yeah. And Dave, don't we run into a lot of people they either have the only insurance they have, and I think I'm speaking for the majority of people, they either have a tiny bit of either term or whole life privately. When I say a little whole life, they have like $100,000 policy or a $50,000 policy.
Right. Yeah.
Right. I could spend that in a month. Easy.
And you have probably.
And nah.
Yeah, just buy a brand new house and tell me how difficult it is to drop $100,000. Right. It's very easy.
Yeah, I think I saw a thing the other day where was it Vanderbilt or something? It's like, approaching $90,000 a year to go there. Wow. There, grants and scholarships, whatever. But I'm just saying, like, if you didn't have any of that stuff.
Yeah. Well, maybe the Vanderbilt family still makes money from it and they need it because none of them are millionaires anymore.
They sure did build some nice houses, though. My goodness.
Yeah.
Anyway, so yeah. Anyway,
so, and that I'm going to skip one and go to, because what you just said kind of leads into insuring things. All that other type of insurance insures things, where life insurance insures human life. And which of those, between a car or a home and a human life, which one is invaluable? It's the human life. Everything else can be replaced. A human life cannot.
That's right. Cannot be. That's correct.
And
that's right.
And this goes right to, how do you acquire those things? There's only one way to acquire that car or that home: through your labor.
You have to labor for a wage. You have to
labor
produce something.
You have to produce, right? Which requires labor, either mentally or physically. You're laboring and somehow, or you're getting knowledge and becoming an expert so that people will pay you for the value you provide. Without that, there is no things. There is no car. There is no home. So what all that other insurance protects is the fruits of your labor. Life insurance insures your labor itself.
Yeah,
that's pretty crazy to think about.
Yeah, it's so, and maybe it's because I've personally owned whole life insurance for 21 years, right? Since I was 23 years old, I've owned it. And of course, back then my mindset was totally different, but it's never explained like that. No,
not at all.
And I want to, at least plug my financial advisors they were holistically selling me other products too, but they at least sold me a good product and got me thinking about things, even though I hated it at the time. I was like, this is just an expense.
Well, and what you
that
said
I'll never
is
get the money back from.
They sold you a product, right? And I think we talked on the last episode that we don't sell a product, and nobody comes to us looking for a product. We sell teaching you a process and creating that for yourself. So,
yeah, that's right.
Yeah.
Remember, I'm not trying to become your banker. My job is to teach you how to become your own banker.
Absolutely.
Right? That's what we're trying to do here.
Yep. So, yeah, imagine insuring your labor, that the money-making machine that provides for all those fruits of your labor, the house, the cars, the food, the clothing, the schools, etc. Life insurance protects all the future capability that you have, your potential. It ensures your potential. And it creates cash. Right? If you wreck your car,
man.
they're just
stole the words right out of my mouth.
Yeah, I beat you. But your car, your home, they're just replacing the cash that's already been spent. With your
Right.
life insurance creates cash that has never, like that has yet to come into
It did
existence.
not exist before.
It did not exist
right.
before because you did not produce that income yet. It creates that cash for your family immediately. Crazy.
Give me pennies and I'll give you dollars.
That's all it is. You guys come work with us. You give the company that we bring you to pennies, they'll give you dollars in return. Yep. Cool. How about this one? Has your car insurance gone up since you started driving 25 years ago?
Oh yeah.
Incredibly, right? So premium
homeowners too, like
homeowners insurance. Oh my gosh.
Especially for you Floridians. Holy.
That's like more than your mortgage probably. So
I think my parents' premiums doubled.
Right. So those premiums are always going to go up. It's like one of those negative costs on your balance sheet that premium can only go up. It will never go down unless you downsize significantly into a smaller house, or you get rid of a car or kick some teenage drivers off your payroll. That'll help. Can't wait for that day. Yeah, I don't want them to grow up so fast, but I do want them off my insurance because it's ridiculous. But your life insurance premium will never increase. Guaranteed.
Yeah, in fact, on an individual policy over time, it's unfortunate that this happens, but to avoid MEC rules and be compliant with the modified endowment contract rules that your government created in the 1980s, the premiums will drop with these types of policies unless you do an all-base policy, which, by the way, I'm going to plug this. I'm going to do an all-base policy on my next policy.
Can't wait.
I just put it out on Facebook too.
Nice.
So my next policy is going to be all-base. Anyway, so the premium won't drop off as fast. It still drops off a little bit at the very end. But anyway, so it's unfortunate that happens because it should feel cheaper every year. It will feel cheaper every year. And you're going to say, hey, I've got all this extra money. What do I do? Well, you have to expand. You have to open up another branch to your banking system, right? And you have to start that capitalization phase all over again. And that's fine.
At whatever age you're at that time.
Correct. Or maybe you do it on a child or grandchild or something. But it is. I used to look at this even early in my IBC journey. I was like, one of the things I would point out, I was like, look, the premium goes down over time.
Like that's a benefit. It's really
like
not.
It was a benefit. Like, hey, and now I'm like, well, that was the wrong way to look at it. It's unfortunate that happens. If I'm setting this premium now, I wish it could just stay there in perpetuity until the policy is paid for at age 95, 75, 85, whatever it is.
Yeah.
So yeah, it's unfortunate, but
it is.
It will never get more expensive. At least
it will never rise. It will unfortunately decrease. And at the point where, here's another one where you no longer, you with 100% certainty are happy and excited and motivated to pay that premium. Right. Which is another difference between other insurance and life insurance is the other insurance. I hate paying that premium.
Yep.
I see that automatic deduction from my account for auto and homeowner.
Automatic.
Like, oh, come on. That's money I'm never getting back unless my car gets destroyed.
Right.
But with my life insurance premium, I have it on my calendar. I'm like, get to pay my premium like on this date. And I'm just waiting for that day to come because as soon as that day hits, I go online, pay the premium.
Yep. I got one coming up in June.
Yeah.
Can't wait.
Yeah. So some of these months when I go a couple months with no premiums to pay, it's like, well, I need to start another policy because I need to pay premium. We must sound crazy to people who've never done this before, but I think we have a lot of clients who listen, who understand it, and they will reinforce that idea that, hey, they're looking forward to paying that premium. Man, the next year can't come quick enough so they can go to year 3 or year 4 or year 5.
Yep. Well, these problems that we all have, right? We all have problems, and most problems kind of get tied back to money. So if the problem's going to be the problem. It's going to be there tomorrow. It's going to be there next year. It's going to be there 10 years from now, 20 years from now. The future's unknown. It's almost like the future's unknown. You know, what is your health going to be like? What is your children's health going to be like? What is your grandchildren's health going to be like? We don't know any of the answers to these questions over the long term, right? The problems are going to be there, but the premiums are going to be the solution. And the higher premium relative to your income that you pay, the more problems and the sooner you will solve these problems. And that's, again, for a novice, even for maybe some people that are doing it. Maybe there's not a high level of understanding yet on that particular thing. I think a lot of our clients, I'm excluding them from this conversation because they get it, but it is a mindset change, Dave, right? Where I can't believe this dude's excited to pay X amount of dollars in whole life insurance premium.
Yeah.
What a weird thing.
Yeah. I got 99 problems, but premium ain't one.
That's right. And that's because we understand, folks, right? We understand.
It is anything but a problem.
Yep. It is not a problem. It is, again,
it's the solution.
These are my assets. I'm putting money into my assets. And I'm going to continue to put money into my assets, right? Why wouldn't I do that?
Right. Yeah. So another comparison, regular insurance versus life insurance, the more you pay with that regular insurance, the worse it is, the worse it feels.
You buy another car, it's more premium that's going down into a hole.
It's the
and
cost
it's not
of ownership.
The hole that you dug. It's a hole that somebody else owns.
And they're receiving all that money. You ain't getting none of it back.
Versus life insurance.
Yeah. The more I pay, the better it is. It's just, it is. And it gets better every single year.
Yes. It will be the best on the day you graduated. In fact, not for you, but for somebody.
When your family needs it the most, it'll pay out the most.
Yep.
Yeah.
When you walk out, I walk in with cash.
Don't walk out anytime soon though, because I don't want to.
No.
I don't want to deliver that. I don't have a desire to deliver that check to your family.
No.
But
it's part of the business, though, isn't it?
Yeah, I am pretty sure they're not going to be upset with what I bring. I'm not bringing a casserole. I'm bringing millions of tax-free dollars.
That's right, and real, family-related experience. A friend of the family. Do not. When you get into your 50s, 60s, and you're buying your retirement home or whatever, and you're moving to Florida, please don't cash in your whole life policy.
Ooh.
And then die like the next year. Don't do that. I know our clients, they're like, what are you, crazy, Paul? I would never get rid of this thing. But people do.
Yeah. Well, people don't know what they have. I mean,
they don't know what they have. That's right.
I've got somebody I work with on the military side who's got a bunch of cash value and some really great policies that are very mature and efficient. And I was happy to explain to him what he actually had in his hands, and that you've got a great thing here. You're viewing it as an expense. It's not. This is the first place you want to put your dollars now, and keep that going.
Yeah. And if he doesn't want them, I'll buy them.
We actually had a client text me. He was like, I heard you guys talking about, people canceling policies and somebody else buying them. Let me know. I want to buy one of these.
He texted me too. And I was like, yeah, man, people do on occasion, get rid of their policies, and for them, it's, they just want the cash value out of it. Right. So
yeah. And they typically get a better deal than they would by just surrendering the policy, because they're going to get more than what the surrender value is.
That's right.
So it's a good deal for them. Good deal for somebody who buys it, because they know what they're buying. Nobody's going to buy that. And we're not talking about like buying policies from a 75-year-old with cancer. Like, that's just immoral.
No, generally it's something has happened financially and there's a need for cash. And anyway, it's an unfortunate circumstance. It's not like we're out there looking for it, but it does happen from time to time, and people do.
And it's completely legal. It's completely legal.
Yeah, it's a private contract. Anyone can.
Yeah, yep, exactly. And frankly, even if you surrender a policy, that policy doesn't disappear. Somebody is owning that policy. The company doesn't get rid of it. Somebody else buys it. So there's institutions that do that kind of stuff. Yeah. Which is why sometimes you can actually go back a year or two later and be like, actually, I want that policy back.
Right.
So
yeah.
interesting, huh?
You're going to
Those
pay
policies-
for it though.
Yeah.
So
Somebody's
save
going
your
to
money.
profit. Yeah.
Yep.
So really, I think that was pretty good. What we're really trying to get through to the listener is this isn't insurance like you've been taught to think of insurance, which is an expense, a necessary evil. Business insurance, home insurance, auto insurance, like that's an expense. And it's a sunk cost. You're never going to get those dollars back unless a catastrophe happens. With life insurance, you're guaranteed to get those dollars back. And when a catastrophe happens, which it will, guaranteed 100%, you'll get even more back, or your family will.
That's
or
right.
technically your beneficiaries.
Yeah, it's the wrong way to look at dividend paying whole life as an expense.
Yeah.
And that's what the general public is programmed to think, which is why most people don't own it. They used to own it, now they don't own it. I think it is catching on though that it's easier nowadays to find out the truth. It is. There's a lot of garbage out there, but the truth can be found on any topic, right? And especially this one. Like it's worth doing your own research, using your own functioning brain to make a determination that, hey, Uncle Bob, this doesn't look like what you said. Have you ever owned this? Well, no, but this guy on YouTube says this,
and he's got a southern accent, and he's very cynical, so he must be.
He goes to church, and
he goes to church.
Yeah.
Yeah. So
yeah. Anyway,
he must be right. Yeah, I go to church too.
Yeah.
Doesn't mean I'm right about everything.
Nope.
Just whole life insurance.
Correct. You're 100% correct on whole life insurance.
Thank you. Yep. All right, everybody. So look, whole life insurance, it is not an expense. It is an asset. And if you don't have that mindset, you just haven't researched it enough, or, you haven't caught it. It's caught, not taught. So hopefully we did the best we could to try to help people understand that it's not an expense, it's an asset, and it requires a different way of thinking. Look like you had a thought.
Yeah.
There.
I was just thinking of, just posing a question. We've talked about how these policies get more efficient with age. They get more efficient every year. And in some of the years, let's say like in year 20 of a policy, every dollar in premium is making $2 of cash. What other guaranteed liquid asset can somebody put a chunk of money and double it in a year?
Yep. Yeah, I don't know. Without taking any risk. I mean, you could go to the roulette table, Paul, and do that in a day.
Yeah.
But there's also a 50%, actually probably more like a 52 or 55% chance you're going to fail.
Right. So in a guaranteed contractual private manner, I can take a chunk of money and double that chunk of money in a 12-month period.
Yeah.
There's nowhere else to do that.
Yeah. And again, to restate,
have we found one?
20 years in the future, but yeah.
Yes, I don't mean today.
Yeah.
I just mean talking about the efficiency.
I was just reiterating because you said it right. Yeah.
Yeah. And the growth over time, get past the startup costs, and then, oh my goodness, in year 30, it's tripling. In year 40, it's quadrupling. And if you're a kid and you started this, your parents started this for you, it's even better than that.
And they probably started it too small, but that's, you can't really get those too big at the beginning anyway.
But anyway, that was kind of way off topic. I was just trying to think of, most people just think it's never good. They think premium dollars, expense, black hole, never going to see it again.
Yeah.
That's the logic.
Yeah.
And that's why they don't do this.
Yeah. So hopefully that clears some things up for everybody though.
It's clear as mud.
Clear as mud. All right. Well, everybody have a good week. Hope the weather's getting nice where you live. It's about to get that way here, and start enjoying being outside again. So, hey, until next week, control your capital.
Or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle on a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.